Good morning, good afternoon, good evening, everyone. A very warm welcome to all of you. I am Katrien van Marsenille. I'm Marketing Director at VeriPark. I'm based in Belgium, and I'm really excited to see so many people joining us from all over the world, from Canada to Australia. It's still very early for some of you, or quite late already for others. So thank you really for being there. I would like to welcome our speakers. We have, of course, Jason Malo, who is a digital banking strategy executive at Gartner, based in the USA, so it's still early morning for him. Jason, can I ask you to briefly introduce yourself and what you do at Gartner?
Of course, thanks, Catherine. My name's Jason Malo. As you mentioned, I work at Gartner. I'm an expert in the banking financial services area. I worked for Bank of America for about 10 years, was a product manager for a technology provider, and have been in this role now for about 8.5 years, covering things like cloud, AI, and multi-channel customer engagement for banks. So thank you so much for letting me be here today, and thank you all for joining us.
Thank you, and I'm really looking forward to hear your insights. I would also like to present my colleague Steve Such. He's a digital advisor at VeriPark. He's based in London. Hi, Jason. Hi, Jason. Hi, Steve, I mean.
Hi, everybody. Nice to meet you, and very much looking forward to sharing some expertise with you later.
Yes, so you will, after Jason's keynote, you will briefly introduce VeriPark and show how our digital banking solutions built on Microsoft technology allow banks to align their digital strategy with their customer strategy by enabling customers to move seamlessly from physical to digital channels in a true omni-channel approach. So welcome to you as well. And then finally, we have my colleague Syed Ali in the call, who is a solution consultant pre-sales. Hi, Syed.
Yeah. Hi, Katrien. Hello, everyone.
And you will be joining us at the end of the session to answer all the questions at the end of the webinar. So welcome to you all. Before we start, I would just like to discuss a few practical things for all attendees. You can, if we can move to the next slide. Yes, so you all see your control panel at the right of your screen, which you can expand or collapse with the orange arrow that you see on top. You can also adjust your audio in this panel if needed. I would also like to encourage you to submit your questions and comments during the whole session via the questions panel. We will answer them all or as many as we can at the end of the session. And finally, I would also like to say that we are recording this webinar, so you will all receive a link to the session at the end. So with that, I would like to give the floor to Jason for his presentation and ask my colleagues to turn off their cameras. Thank you.
And so if we could you just confirm that you can see my presentation?
Yes, we can see your screen, so you can go ahead.
Wonderful. Well, again, thank you all so much for your time today. Really excited to bring this information to you. There's a lot of information, a lot of data in here that's a result of some consumer surveys, a big amount of collaboration on the Gartner side with regard to kind of bringing all of these pieces together. So I can honestly say, I mentioned I've been in this role for about 8.5 years. This is probably one of my favorite presentations, because we start talking about really how to engage with our customers. And as you can see, the title is something that may be a little controversial to start with, and we've kind of had this idea of digital really being what's driven our engagement strategy with customers, and we can definitively say that taking an approach that is so hyper-focused on digital is actually not the most conducive to successful customer engagement. And this is a story we've been telling for some time, but as Catherine mentioned, getting into kind of what we've been calling omni-channel for some time, that's really where we're going at this point. And I hope this can help you kind of recalibrate the way that you think about some of these things. So we can't have a conversation in 2020, however, without starting with the impacts of the pandemic, right? And I think that it's important in this particular case to mention this because digital has become so much at the forefront of the way that we engage with our customers, right? And you see a lot of acceleration with regard to digital adoption over the course of this year. And there are different sort of things that we've cited here on the left, that globally there's a significant increase, and even in older generations, 23% of first-time digital users in April of this year for B of A were in older generations. The use by e-commerce businesses, you can see National Australia Bank, on the right-hand side, significant increase in digital, even amongst small businesses, which has traditionally been part of a customer base that's not used digital. So this is sort of stands in a little bit of contrast to what I've said right at the title slide, that digital is up. And then we also can look at on the right-hand side that the common perception here is that branches are probably going to close at an accelerated rate. So the thing that I want to really kind of talk about here, though, is that we're looking at these things in a situation that is not a normal, if you will, situation. That as we think about digital and we look at these numbers and adoption, and we look at sort of the physical location impacts with the pandemic, we need to really think about what's changed over the course of 2020. And what's changed is not necessarily this leap forward in capability around digital. What's actually changed is that branches are not available. So the shift has not been a capability shift, it has been an availability shift. So we need to sort of adjust around those types of things. Well, then the logical question becomes, well, how do we need to adapt for the now, and how do we need to adapt for when we hope to emerge out of this and the post-pandemic situation? And I think the first thing to really just start with is understanding how we've kind of shaped our conventional thinking over the course of the last few years. That in the first decade of this millennium, everything was about web, and everything was really about pushing banking services to our customers that they could self-serve. And we had sort of the main evolution in that first decade was around delivering real-time information to them. They don't have to go to an ATM or a branch just to get things like their account balance or the last 10 transactions, those types of things. Then we went into a new phase in the second decade, which was really around mobile, and creating not just availability of that information in real time, but accessibility in real time, because they were carrying these devices with them. And we were doing some things that the first kind of cross-channel engagement we were really pushing toward was more of a development approach. Let's create something where we can develop an experience once, and through a responsive kind of approach, have it deployed in multiple ways. So it's much more of a product channel centric sort of view. And we were also trying to figure out how customers would use these things, and they were figuring out those as well. So we have this new ability to kind of deliver information to them. We're finding out there's a whole bunch of different ways that we can engage with them, and they were finding things out as well. Well, now coming into 2020, even pre-pandemic, we were finally getting to this point where the mobile channel had matured. There's not a significant amount of change really from a feature functionality standpoint. There's obviously ways that it's moved forward. I don't mean to suggest that, but in terms of its maturity as an engagement channel, it was there. So we're getting to this point of a conversational or channel adaptive approach with our customers, where we can truly start in one place and move to another. Just by virtue of sort of example, one of my favorite questions banks used to be, okay, we have had this conversation, and this is probably around 2015. We've been having this conversation already, start in mobile end up in call centers or end up in the branch. And I would say about less than 10% of banks actually said that if a customer walked into the branch, authenticated, could they even tell if the customer had the app? Not even was information passing back and forth, but there was no kind of cross-channel engagement. And we're finally really within this decade just starting to get to that point, even with the backdrop of the pandemic, and in some ways accelerated by it. So if digital first is not customer first, we actually kind of need to look at this and break it out into two key challenges. So first is one of the reasons that digital is so attractive to banks is that we can start pushing customers toward an efficiency in serving them, right? That's kind of the one side of the idea, that we can push them into what we could call lower cost channels, and that people could self-serve and that we'd be efficient that way. And you can see from the quote here that because of all of that work that we've done and because of all that focus in digital, we're able to serve them, right? That's one thing I want to make sure I don't kind of gloss over, is that, you know, this investment in digital is good. As much as I may sort of like, you know, cast a little bit of shadow on some of the engagement approaches, this is good. It's enabled us in many ways to withstand what's been going on over the course of the last year. But you can see that people are actually coming back into the branches, and when they open, because A, there's something they just didn't feel like they could accomplish online. B, it's something they didn't want to accomplish online. But then the third part is there are digital problems that are created as this, you know, pandemic has gone forward. In the second part of the presentation, we'll talk about how that driving people around efficiency can actually drive enhancement of the way that we can engage with them. But for now, what I'd like to do is really start with just busting a few myths. We have this kind of conventional wisdom, and I've heard a lot of things over the course of the last few years around a mobile first strategy, a digital first strategy, and it's entirely predicated on this idea that we need to be able to serve the younger generations, and they prefer to use digital. And part of this comes from, if you're looking at this from left to right, part of this comes from the idea that if you're looking at who wants to interact only with people on the left-hand side of this, versus those who interact only with technology on the right, that the older generations want to interact in person more frequently than younger generations. And you can see 18% in the upper left. This is true. That's something that actually does hold, that you know, is conventional wisdom. Older people do tend to want to interact only in branches more than younger generations do. And I should say, actually, this is a global study, and we present the global data because there really were, you know, minute changes as we looked region to region, but all of the kind of the things that come out of this, the ideas and the conclusions are all the same. That there may be some numbers that change a little bit from region to region globally, but all of these hold very well from region to region. So we know that older people, yeah, they do want to interact a lot more in person, but we've assumed the converse to be true. And if you look in the bottom right, you can see that the 18 to 34-year-olds, they actually interact less frequently with digital than older generations do. And if we think about that for a second, first of all, it may surprise some of you. Some of you it may not. I've had a lot of different reactions to this. Certainly, there are some banks that I'll see some folks sit back in their chairs and say, "Okay, this is really just, you know, completely upended the way that we perceive this." But in others, I think we're starting to get a sense that that's true. But really the guts of this ends up being that younger people may have grown up with these peripherals. They may have grown up with technology and have a higher level of comfort, if you will, with the fact that they've matured with them, but they still need to learn how to manage their finances. And so when you start looking at technology and customer engagement in a banking context, those 18 to 34-year-olds still need a little bit more help. Now, the message here is not, you know, in-person good, digital bad. What you actually see is that far and away, most people use all of the different channels at their disposal. One last thing to mention is that this was conducted just prior to the pandemic. Actually, this was finished right before a lot of the shutdowns began on a global basis, and that's important because at this point we can show that there has not been that availability shift. This is how people were using channels prior to the kind of forcing them into the digital space. So the other myth, or one of the other myths, is that we've kind of been in this phase of we need to replicate capabilities. We need to give people we need to give our customers choice. If they want to do everything in mobile, let them do everything in mobile. If they want to do everything in the branch, let them do everything in the branch. And what we have here is you can see that we've, over the course of 5 years in our effortless experience survey is what it's called, we've actually really looked at first contact and customer satisfaction, and based on the number of channels the company has, you can see that both of those decline. So first contact resolution declines if the organization offers a lot of channels, and you can see that the customer satisfaction does as well. And a big part of this is not, again, to say, well, we shouldn't, try to kind of replicate some of these features and functions, but when you have customers that are trying to figure out how to do things, it's something where if they're starting in one place, get stuck, need to migrate to another, those transitions have not been set up very well. We're still doing a lot of different things in silos. And one thing really to mention here is that a lot of times this is not a technology issue, as I'm sure you all know, that sometimes we develop pieces of customer engagement strategies and we develop those capabilities in our different silos. We talk a lot about culture, we talk a lot about breaking down barriers, those types of things, but we also need to be fair in that we have a team that's aligned to mobile. You have a team that's aligned to online. There are teams that are aligned to delivering customer experience by branches, and they're looking to do the best possible job for those customers that they can, right? So in some ways, we look at this and we start to think we've got to break down those silos, which has long been something that we've discussed going back to when I was in banking even. And I think a lot of times we look at those and we think that we've got to do this big kind of change or organizational restructuring, but oftentimes it's just a matter of saying that this is actually not something that's driving satisfaction and it's actually hurting our engagement with customers. Then we can start to build toward some common approaches and weaving together customer journeys. So we know that customers don't want to use entirely digital. We know that more choices actually don't necessarily help the customer. Well, the other one is, well, we're going to migrate them to lower cost channels. And this idea that digital is more cost effective also is kind of wrong. When we start looking at these customer journeys and you begin to think about, okay, if a customer uses only self-service, then 9% of the transactions that we monitored here were 10 cents, pardon me, 10 cents US per transaction, right? So that's kind of where this idea comes from. But what we saw is then they have to switch out in certain situations to an assisted rep kind of situation where they move from self-service into something that is assisted. And you can see if they use one other live channel, then your cost goes to $8. If they go then to 2, 3, or 4, you actually get into a situation where these can cost you up to $80 per transaction. If we're looking at a situation where you're not able to transition well from the self-service into the assisted service. And the way that this has been approached to our detriment has been to say, well, let's push more of that capability into digital. Maybe we need to update our self-service capabilities and push a lot more of that to the customer. Let's make things clearer. Let's use analytics. And those are all really good things to do. As I mentioned, the focus that we've had on digital in a lot of ways has enabled us to make it through this pandemic and serve customers globally. I mean, I think it's been instrumental, and something that we don't recognize quite as much is that all of these things that we did for certain reasons have had this benefit of making us a lot more resilient to providing services to the customers. But we can see here that when customers really need help, they're not going to self-serve, and we're not doing a very good job at that switching part. So let's look at the other side of the balance sheet, though. So we've talked about how customers use the channels. We've talked about how it creates their satisfaction. Talked about one side of the balance sheet of cost, which has really driven this, but let's also talk about the other side of this. Let's talk about revenue. Again, kind of returning to that survey where we looked at how customers interact with their banks. What we asked them next was, okay, post-transaction that you've just completed, what is your next likely action? And then we quantify those actions into different categories of positive or negative. And you can see the light blue at the very top is that they are very likely to take a positive revenue action, and that could be getting another product, deepening their relationship, those types of things. If you look at the digitally engaged, interacted only with technology on the far right, you can see that not only is the revenue number the least, as it is of the other 5 engagement strategies, but what defines them is actually their neutrality. So while digital only consumers actually tend to be the most passionate about being digital only, this is how they did interact. We also had a question where we asked them how they would prefer to. They're passionate about being digital only, which skews our thinking a little bit. We know that they are least likely to deepen their relationship with the organization. We also know that roughly 10% of them said that they want to be digital only, but that number drops to 4% if they encounter a situation that they were not prepared to deal with. So one thing to note, because I'm going to reference it a little bit later here in the presentation as well, is that interacted with people and technology equally, that's a higher revenue opportunity, as you can see from this, that there's an opportunity there to deepen the relationship more than there is on the other sides of things. So the extremes here in this situation, again, are areas where there is less opportunity than a blended approach. And what's key to this is, again, not digital equals bad. Digital is incredibly good, and it is very clear in improving the relationship with your customers when it's not deployed by itself and when it's not meant to stand on its own. I would hazard to say that most of you that are listening here today have a combination of channels available, right? That you have all of these pieces here that, as much as we've been talking about digital only banks and neobanks, there still needs to be a person involved at some point. But what we can see here is if we look at exclusively digital on the right-hand side, the relationship value drops drastically. Again, because they really do not create deep relationships with their organizations. And you can imagine, if you will, just looking at your mobile devices, that they probably have 3 or 4 different financial institution apps all right next to each other. But it's also one of those things where you can see on the far left that it doesn't improve, or the opportunity to improve over an exclusively branch approach is different as well. That you can look at those people that are on that fringe on the left-hand side also and say, you know what, they are actually much better served when we start to weave in some digital experiences as well. And so let's talk about what that really looks like. So optimization and COVID, we've kind of raised the right questions here with regard to this, because all of a sudden, again, we found ourselves in this situation where we didn't have a great leap forward of capability. What we had was a challenge with our availability. And what you started to see was, how do we, on the right-hand side, how do we ensure that, if we lose a channel, that we're prepared to pick up the load in others? I kind of want you to imagine actually what would happen, how would we think about this if the internet went out for a month? That all of a sudden, instead of a biological virus, there was a computer virus that made us have to shut down the internet for a month. this is kind of making us think a lot of different things with regard to the availability of the branch. But think about this from a standpoint of what happens if those digital channels went out. In some ways, it's a fun exercise. It would be a fun debate to have in a room. I think is what would happen really if the internet all of a sudden disappeared. But then on the left-hand side, something I mentioned earlier, which is we've got channel conflict, and we kind of cannibalize, if you will, the approach to customers, especially when we start thinking about sales and marketing, or bringing customers on board. We want to create this ecosystem for customers, but then within each of our channels, we also want to do as much for them as possible. And again, it's not always a technology issue. A lot of times it is about doing as much as we can. A lot of times it's about how do we make sure we get credit for the things that we're doing with them. A lot of times you start looking at your budgets and saying, well, we have responsibilities for gaining new customers through these different channels, and how do you kind of achieve, share credit on a lot of those different things. There's so many aspects of the channels as silos, and really that's a pretty key issue as we start to move forward, that while digital has taken the limelight, if you will, because the other one has been sidelined, because branches have been sidelined, how do we really start to move into something where we're not only looking at how to engage customers in multiple ways, but how do we share credit, and how do we make sure that we're not competing against ourselves? And one way that we've found, something that we really, really like, is this example from the Australian Taxation Office. And what I'm showing here is what they've created called a channel suitability framework. And on the left-hand side, you can see a list of their available channels. And on the top, you can see the client groups, and then 3 different categories. The gathering of information by the client, supporting them through different challenges or changes, and then things that are much more transactional. And for each one of those, then they have a key, and you can see on the color coding, and I apologize if the text is really small here, so I'll tell you that the green is preferred. Then they have blue for next best, yellow for suitable, and red for not suitable. And very quickly, what you can get to here is just kind of an idea of how well does this work for the customer. That's the first piece. And then what is really cool, and something we spend a lot of time talking about, and something that we even were working on prior to the pandemic this year, is how does this support the staff? A lot of our experience conversations, and you can see staff on the bottom left there, second from the bottom. Apologize, my numbering got broken somehow. So second from the bottom on the left is does the channel have implications for any staff resourcing or functionality around the customer's issues? The ability to drive digital enablement to customer-facing staff is not new, but what is coming into much more significant focus is that it's not necessarily the same thing the customer's looking at from an experience standpoint. Might be some of the same data, and oftentimes it's through different channels. It's themselves. It's their different applications. You have people in branches I know that are using 4 or 5 different applications and have to flip around back and forth to them. That ability to create a suitable experience for customer and staff was an underlying element here that went into that color coding. So just to break down some of the pieces on the right here, when you start thinking about that color coding in terms of your own evaluation, if you were to use this tool, the ability to consider business interest is always really important. As much as we have been talking about customer experience and optimizing the customer experience over the course of the last few years, it's impossible not to consider cost to operate. It's impossible not to consider, the channel maturity and really driving some of those pieces. I would suggest that's something that maybe has been under considered as we've pushed toward mobile. But also the ability to kind of think about future optimization. That is something that's come in a significant amount. We're reaching sort of this point, it feels like, where the fintech discussion and the boom, if you will, around fintechs has waned a bit. In some measure because we have matured the mobile channel. That was really what the focus had been, but also because we're seeing a lot of these combination situations where you have neobanks or you have the likes of digital giants, digital dragons that are starting to bring in some new capabilities and some new ecosystems. So that third bullet in the upper right-hand box is maybe a really interesting one to drive discussion around those color coding. And then the fourth bullet there is something I get quite passionate about. I won't get up on the soapbox with this today, but we can say definitively that banks globally are not really good at measuring. From my days as a product manager, I can tell you that reporting was always incredibly important, and it was always second. And when I say it's always second, no matter if you're running waterfall, agile, there was always, 1A was capability and functionality, and 1B was always reporting, but there was always a new 1A that came along. And so, if the opportunity presents, we'd love to talk about just digital measurement. It's not something that's done very well. And the example that I like to talk about now, given what we've discussed earlier, is you need to make sure you can understand what your transaction mix is within your physical locations. So the reason for that is the example I posted before about someone coming into the branch with their digital problems. There is a spike that will happen, has happened in some locations around reopening of the branch. And again, you're going to get a spike in things that people did not feel they could do or did not want to do online. So there's a bit of a backlog. Then you will see things sort of, come to an equilibrium, if you will. If you can measure what your transaction mix was before the pandemic, and when that equilibrium comes into play, then you can see what the true delta has been around digital engagement and converting those customers. There's actually a really good opportunity to understand the value of digital and the value of your branch, but you have to be able to measure pre-pandemic and post-pandemic equilibrium situations. So let's actually show how the, the last thing I do want to make sure to mention is the very bottom line. When we start looking at this, a lot of times we start thinking about the technology, but really crucial, incredibly crucial, is the talent needed to be deployed. We looked at, every year we do an annual CEO survey and CIO survey. And from a CIO survey first, there's a lot of investment that's going on in automation and enablement of frontline support. But when we combine that with the CEO survey, what the CEO shows is that their probably greatest area of interest and greatest area where they think that they have deficiency is around talent. And we could talk quite a bit about that, but ultimately, as we start looking at some of these transformative technologies, one thing that we've rushed past in some organizations is the ability to run it. And so talent is actually something that really needs to come into focus here, not just from a standpoint of frontline people, but also those who know how to manage automation. For example, the same people that you're automating out of a job, if you will, are the same ones that you can transform into those who are going to maintain the automation. So when ATO did this is actually what it looked like. And I think that here, this is just an example. This is adapted from a taxation office. And so you see a lot of green within those digital channels at the top. The green for them is probably going to be different than the green for a physical, physically oriented kind of conversation, but because they don't have as many sort of really complicated situations or situations where they have to do a lot of those types of things online. But the good thing is they don't just color them. And again, I apologize for the size of the text here if you can't necessarily see that, but you can see that they have actually, even within their natural systems at the top, said that on an informational standpoint, there's replication that's going on. For the natural systems, the ATO online portal and their mobile app, they're actually saying that they're just doing replication of that web row, and the web row actually says personalized and tailored content. So they're driving a lot of their efforts with that informational piece through one channel and then being very deliberate about recognizing that the other channels are replicating what was done in that first one. So replication is not bad. You know, I know I talked a little bit earlier about trying to replicate everything in every single channel. The caveat, or the thing that needs to be mentioned, is that the replication, if you are able to center your efforts around one particular piece, is not a bad thing. It's actually something that will create consistency and may alleviate confusion. But the key here is that you only have one of their channels that has been identified as, if you will, the system of record. When you start getting into some other aspects, so web chat is where you see the first red on the row. You can also see that within the support column, they have a blue that says next best, and they also have a yellow which is suitable, but they've also got a little bit of caveats in here. The blue one for the web chat says that for support, they've got a next best channel because they can authenticate their web chat, but they also have a non-authenticated web chat, and that's not really the best, but it can be made to work. So the reason that I'm reading a bunch of these things out to go with the colors here is that if you were to do this within your own organization, you can then take this one suitability framework and say, here is how we're looking to deliver through these different channels, through the customers. Here's why this is the best channel. Here's why this is secondary, and here's why this is a suitable type of situation. Or here's where you don't even want to think about that functionality if you're in a face-to-face situation. This is something where you could very easily distribute that across your organization and know that if we're talking about you know, support, you know, the phone channel is really, really great. If we're talking about face-to-face, there's actually some things that we need to not put at the top of our list. And we need to drive them to other channels. That ends up being the key as well, is that you're not necessarily going to be in the best channel to support this. How do you deliver them to the place where you can actually do that best? So as we've been talking about that migration piece, that's great. We can say, all right, hopefully ATO has shown us a way to create a roadmap, if you will, for everyone agreeing to the best place to deliver your customers. But then it's not just about migrating them for efficiency, it's also how do we make sure this is the best approach for them? And from this quote, you can see a lot of the way that we've talked about doing this in the past has been oriented around this idea of complexity, right? The difference between using the branch and using digital is complexity. And I would say that that is sort of true. I think that is a very high level summary, and it's something that I think has helped us to orient ourselves for some time, but it's not necessarily been the best way to drive trust. We know that there's certain things where we can do things that are certainly complex over here and things that are not over there. But in a lot of ways, we've looked at this as a challenge. We've looked at this to say, okay, well, how do we take those complex actions that are in physical locations and drive them into digital? We've used the thought of complexity as something that was going to almost issue a digital challenge to us, and how do we kind of push those things into what we were anticipating were lower cost channels. We've already said we're not. So, sorry, there we go. We wanted to take it one step further. And this is the slide that I would say, if you need to print something out, this is the one to have on your desk. And the reason is because we took that survey I've mentioned a couple of times. We talked to the customer. How have they worked with their financial institution? What did they do? And then we said, well, what do you value about your bank? And there are certain things that are the same, right? So if you start looking at digital or online or mobile, online, in person, security has to go across, right? So from a standpoint of customers picking one channel versus another, we could break down different types of security issues to be sure, but security is equally important. So is providing consistent information, so is giving me, you know, ability to kind of do my own research. But when we start looking at the differences, this becomes really compelling. On the left-hand side, you can see that people who were more passionate about their digital, or I'm sorry, I want to say this right. People who engaged in digital ways. So this is not about preference, this is actually what they did. They engaged, and the key values for them that were different is they wanted to minimize the amount of time, which makes sense to us. But the next two things that were different were they wanted their banks to prevent them from doing something wrong. They wanted them to let them know when they were going to fall off track from their goals. And this, I can tell you from some of our historical studies, has been where customers' needs and what banks deliver actually has not been met at this point. And the idea, though, is pretty straightforward. When you start thinking about, let's say we're going to send a customer an alert, you can't just send them a text message that says you're going to fall off track. There has to be a path that the customer can take to rectify that. And that really has been the thing that has prevented us. That complexity of detailing out those actions and trying to serve them all within the same channel has limited our capability to help the customer. Now, not to suggest that those two bullets are easy. Preventing them from making a mistake and alerting them when they're going to fall off track, that's a complex challenge. We've done really well with fraud because we kind of get to define what fraud, or not, we don't get to define it, but we know what fraud looks like. And so we have sort of a set of requirements, if you will, to build off of things. But analytics and AI, the whole key to that around this type of engagement is knowing the customer, having a segmentation of one, if you will, and knowing that when we're talking about making a mistake, it's a mistake specifically for that customer. When we're talking about falling off track, it's specifically for them. So creating the analytics and driving, those types of experiences within online channels, that's really within our grasp. But then how do we serve them? And how do we help them fix it? And that's where these in-person differentiators come in. It's not just about complexity. It's when customers go to an in-person channel, what they're looking for is expertise. They want information that is specific to their challenge. They want information that is given to them objectively and does not feel like they're pushing products to them. And that's why they go. And it's not always even that they are looking for someone to tell them what their options are. Sometimes they may have already done the work, but they really value the idea of someone saying, this is a good approach, this might not be a good approach, and helping them to create justification. When we start thinking, pardon me, when we start thinking about this, I've heard a lot of organizations equate what their goals are to other types of institutions, retail institutions, for example, where, for a long time in advising customers what their next best action was, we cited organizations like, Amazon or those types of things. But with banks, that expertise is so much more important because, not to be too sarcastic, but we're not selling toasters. It's fairly easy to compare a 2-slice toaster and a 4-slice toaster. These are much more impactful decisions that customers are making, and that expertise is really critical. So as you look at this page, these are incredibly complementary. Providing customers with real-time notifications that they're about to do something that may not be their best action or best approach or could hurt them in the long run, and then providing them access to expertise that can then help them to solve those problems is immeasurable in terms of where we need to go. And that ability to drive revenue, if you recall that multi-channel remote right in the center, that's where this comes in, right? Is you've got customers that start in one place and they need help, and we not only tell them they need help, we help them through it. That's where you drive that revenue opportunity. However, where customers are, where we're not able to deliver on that is that those channels, that engagement strategy, it lags because customers aren't able to complete those interactions at the same rate as they are in other engagement strategies. When we look at primarily branch, people are able to complete them 55%, by the way, completion rates, still not great, but let's keep this in context of how we're looking at the comparative aspects. Primarily branch, and exclusively digital, those people have a much better understanding, maybe not of their problems, but of how to engage with their bank. They know this is how they're going to do things. In the multi-channel remote area, where we start thinking about equal use of the channels, a lot of time that is because they're casting about looking for information. They're trying to figure out the best possible approach to this. And as you can see here, only a third of those transactions are successfully completed in their mind. So the highest opportunity for revenue, and to be fair, probably one of the higher cost channels actually has one of the lowest completion rates. And so obviously there's some things that we can do here with regard to lowering the cost, but also increasing the satisfaction. And one of the first things that we wanted to do is just say, well, who are these people, right? So we broke some things down, and what we're able to find is that there are about 40% of the population globally are what we would call financially vulnerable. And that is based on some criteria set out by the Consumer Financial Protection Board. We kind of used a standard for defining that, but 40% of people globally are in that category. And when we started, and it's probably actually more, the survey was done toward the beginning of the pandemic, and one would imagine with the unemployment rates and people not being able to work, that number would be even higher. And so you can see here that the financially thriving, they are primarily using the branch, but there's a pretty good mix. It's a quarter of them are using the branch, but beyond that, you can see that there are digital elements that are coming in. Those financially thriving people have more to work with, and so get a lot more help with those types of situations. The financially vulnerable are the ones who are using that middle approach, that one where they're trying to figure out the best possible way to engage, and they end up needing a lot more help. They'll try to do things themselves, but they end up kind of moving from that 10 cents per transaction that we showed earlier into something that is much more complex from an engagement standpoint. So the reason, though, becomes really interesting, and why they use that is actually something that gives you a bit of a roadmap for how we can start to approach this. And the key ends up being that when we start thinking about how customers are interacting and what they are interacting about, these different boxes that are highlighted in red are what we're calling unexpected situations. So financially vulnerable, I apologize, I should have mentioned that one of the key aspects of being financially vulnerable is that there is an unexpected situation which puts you into a situation of financial strife. It does not mean living paycheck to paycheck necessarily. What it means is that if you had something unexpected come along, not only do you have to deal with that, but from a financial continuity perspective, it would actually create a big issue for you. And you can see when you look at the different channel engagement, what people use these different channels for. So overall, people are just managing their daily life, right? If you're looking on the left-hand side, or they're using, they're working with their financial institutions to address service issues. You have these easy things, right? The non-complex things that really top the list. But then when we start to look at the different channels, you see that multi-channel remote is almost, more than half of it's populated by these unexpected situations, that there are situations that pop up that people just need to have dealt with immediately. There's a significant amount of stress involved in any of these before you even start talking about paying. So there's so much here that is really needed to kind of be addressed quickly, and customers just need a lot of help. So as we start thinking about, okay, the multi-channel remote, we know that it's high cost, but we know that it's high revenue opportunity. How do we start to think about making those things work? And that management of daily financial life, have to have that no matter what. Being able to address service issues, that tends to be where we spend a lot of time focusing, but it's these events that they don't know what to do, which causes problems. And one of the examples that we have, we sourced this directly from one of our bank customers were anonymized, but they had a customer who called in, and you can imagine the stress not only on the customers lately, but on contact centers. The customer had a fraud issue. They called in, they had to wait for a certain amount of time on the phone, and then they got routed through 3 or 4 different people before someone said that they needed to go to a branch to have it fixed. So in the time of COVID, we're directing people to branches for fraud issues, and it's just something where we're not really well oriented around taking care of those unexpected situations. We still fall into those day-to-days, and we try to focus on those servicing aspects rather than the actual challenges the customers have. This actually is a good place to mention that I really am looking forward to the day where we replace IVRs with something that can get a little bit more in depth with regard to understanding the customer's challenges, rather than making them sit through 9 different options and having them desperately pushing the 0 key to talk to a person. But the talking to a person part is where that one slide that I mentioned around the value drivers becomes important, because what people need in this situation is an expert. They need an expert who can give them advice and understand their challenge. And the way that we've deployed in contact centers right now is not that. Contact centers are not about delivering expertise at the primary level. They're usually about triage. And most banks, we had an IVR study that a third, I don't want to say banks, companies, a third of them will direct to the first available. A third of them will route based on what product someone is calling them, so not even the issue. And then a third of them actually do try and deliver to someone with some expertise. But with this example from Santander, what we actually can see is something that's a step further. That customers have been able to go into their digital engagement and they can say, here's what our challenges are. And you can start to collect some information. You can imagine this being collected through a chat bot. You can imagine it being collected through something as simple as a contact intake form. But what Santander has actually is not giving them not just transitioning a customer from one channel to another. What they're actually doing is delivering them to an expert. And you can see that these digital managers are available to schedule meetings with. Customers can actually choose how often they're contacted proactively. This is something that has taken them quite a bit of work, as you might imagine. But the key here ends up being that they're delivering customers to an expert, not just someone who can take their call. What this then ends up doing is something that we've kind of been talking about in a lot of ways, where from a standpoint of the branch expertise, that's still there, that you have these managers who are knowledgeable about customer communication, about financial aspects, and that you can train them around decision making and making sure that you can talk to the customer in a way that's going to help them through stressful situations, and then migrate them into this digital manager role, which I took a lot of conversations at the beginning of the year around video banking. And while I'm not necessarily negative about video banking, it's all about delivering that expertise. And so these digital managers may or may not be seen on the screen with the customer, but what they have is expertise. The other thing that you can also have with this is specialization. And your branches, the managers need to know how to do just about anything the customer walks in with, and usually are pretty good at that. But with this, you actually can have some level of specialization. You don't always have to deliver the customer to the same person. And from a standpoint of how that talent plays in, remember I specifically called that out on the ATO slides. Talent then plays into this because there's opportunity for advancement. There's opportunity again for specialized approach, and these digital managers are someone who can really complement those in person and possibly even serve as one of those transitional pieces, but at the same time create a great engagement model. So I wanted to bring up some other examples too to kind of help to underscore some of the other things that I said. So talked about Santander, and that was a digital to personal journey, right? You had someone who started with possibly an issue, They started, maybe they've gotten an alert that there's a challenge that's here, and you had the opportunity to break down some silos by saying, we know they're going to start in one place. We're going to collect the information. We're going to drive everything that's necessary for the customer to understand what's going on. And then we're also going to deliver that to our own person so they're on the same page. So very clear sort of digital to in-person transition. But there are a couple other examples here that are cool as well. The Upstart in the bottom left, Upstart is a fintech, but they worked with a financial institution in the US, and there was a stimulus for small business that was launched, and the process was not clear. And so large banks were really the ones that made a lot of those small business loans. There's a very small bank I've never heard of in New Jersey in the United States. They made more small business loans than any bank in the country except for B of A, Wells Fargo, and JP Morgan Chase. And the reason they were able to do it is because this small organization here was able to not just automate the intake forms, but automate the process from end to end. And the key here really, and when we start talking about a digital first strategy versus a customer first strategy, they started from the end of the journey and basically said, how do we work back from the result instead of how do we work back, how do we start at the intake? And that was where they were able to take an unknown bank and make them compete with some of the largest organizations on the continent, if not the world. PNC is a really good example as well, because what they had in that situation was people walking into a physical location had need for a product, and you had a cannibalization challenge. You had a competitive situation where the person who had spoken to the customer, given them that expertise and said, here's what you need to do, they then gave the customer a link where they could do the application online. Because all of the automation was there, they were able to streamline everything. And within the link, this is old school, this is 20 years ago technology from the beginning of the internet, that link had session variables that you see after the beginning of the URL that gave the person who actually worked with the customer credit for it. So again, the customer got what they needed, but the person that helped them got credit. It was a very, very simple implementation, but something you can see that drives the expertise value driver as well as their ability to kind of stay back on track. And then the M&T Bank piece, the thing that I mentioned earlier about the 800% increase in small businesses using merchant services digitally, that is a big, significant gap. When we start looking at consumer engagement and we start looking at small business engagement, you would anticipate that small businesses might use digital as much as retail would, because we're basically using the retail to serve micro businesses. But actually that's not true. And M&T Bank did something in Philadelphia where they started to cross-train their people and say, let's talk to small business and kind of drive them into some of the same digital engagement models that we see for retail banking. And it was something they did not roll out. They specifically were looking at it within one city, one community where there was some economic hardship, but the opportunity to start to branch beyond just the consumer relationship into some of those is really significant, really high. And so that crossing channels from crossing over from a channel perspective is happening, but crossing over from a line of business perspective is also happening. And so, to sum up, the four things that I really would like to make sure that you take from this is that some of the ideas around channel choice that we have had actually hurt the customer and the bank. And it's not that choice is bad, but the way that we're approaching it does not serve them efficiently, and it doesn't serve them in the way that they engage. Digital channels by themselves are not actually set up to grow revenue. We've thought about this from a standpoint of we've got to do digital to compete, and there certainly is an aspect of that. We don't want to seem antiquated or out of touch, but the way to grow the relationship is not to focus on digital channels by themselves. You actually have to create a broader ecosystem and not let the channels operate in silos. And the reason that I spent a fair amount of time on that ATO example was because that's a great approach to saying, here is the way to serve these customers with all of the channels sitting in front of us. And lastly, and I think this is just such a great way to bring back the customer journey conversation. We had everyone for the last couple of years was talking about journey mapping, and I don't hear about that quite as much. And I think the problem is that when we start at the beginning of a journey, what we find is if we automate and we digitize at the very beginning, we rush to bottlenecks. So you have something that takes about the same amount of time because we haven't looked at it from end to end and we haven't considered the result enough. Rather, we focused on the beginning. And so designing and approaching some of those customer journeys from the end and working back to multiple points of entry is actually the way to really think about how people are going to be involved and where there are truly opportunities to lead with digital. So thank you very much for your time. Catherine, I'd love to turn it back over to you if I could, and would be super happy to take any questions toward the end of our discussion today. Hopefully you've got some that have ginned up, and I'm more than ready to engage with you if you've got some thoughts.
Thank you very much, Jason, for sharing these insights with us. So you will stay with us until the end of the webinar to ask some questions, and I would like to encourage the audience to post them into the questions tab. So you can still do that until we start answering them. But now I would like to hand over the floor to my colleague, Steve. Steve, it's yours.
Thank you.
We can see your presentation. So
okay, that was going to be my first question.
Yeah.
Thank you. So hi everyone. So yeah, just to recap, I'm Steve Such, and I'm a digital advisor at VeriPark. So today we're going to be running through a couple of demos, which are going to basically show how solution enables customers to move seamlessly between physical and digital channels depending on their personal preferences. So I'll start by just giving you a little bit of an introduction about VeriPark. So who is VeriPark? We are a software house established in 1998. We've got 22 years of experience in the financial services industry, and we have over 700 employees based in 15 countries. So we're a global player with our customers spanning over 30 countries worldwide. And we're very proud to say that we're still actually serving our very first customer. We're dedicated to the financial services industry and a leader in working with the Microsoft framework. So I'll just give you an overview of what we have in our VeriPark solution suite. So our solution suite basically provides an end-to-end banking platform. This consists of 4 pillars which work seamlessly together. So our first pillar is VeriChannel. This is our omni-channel solution. It provides different channel capabilities from a single implementation layer. This solution enables both ready-made apps like mobile banking and online banking with state-of-the-art features like intelligent chatbots, document uploads, digital signatures, whilst also having the capabilities to be leveraged as a development platform where financial institutions can even build their own channels. The next pillar is VeriBranch. This takes the transactions that you get from the traditional banking roles of the teller, seller, and advisor, and this combines them into a single unified front end. This is embracing the concept of what we call the universal banker, allowing all branch staff to have those capabilities. VeriTouch is our customer acquisition, retention, and cross-sell pillar. This is built on Dynamics 365, providing our servicing capabilities, whilst also working seamlessly with the channels of the branch. And our final product is VeriLoan, which encompasses our loan origination and servicing capabilities. And under the hood is our adapter layer called VeriLink. And what VeriLink is doing is providing a common interface for us to integrate to core systems and third parties alike. So we've heard a lot from Jason there describing differences between multi-channel, omni-channel, how to leverage those omni-channel experiences. So what we're realizing is that as financial institutions move from a multi-channel to an omni-channel approach, there can be quite a lot of confusion as to how the two strategies differ. So multi-channel typically allowing customers to transact and interact across many different channels and touch points. And whilst many institutions have evolved to move their data into one core repository, we're seeing that many are still remaining very siloed. Omnichannel, in contrast, is providing the seamless customer journey between channels, making it basically a customer experience-centric strategy. So this is not only encompassing the digital channels, but also those customer-facing channels, as there's still those who favour that personal touch, whether that's, for example, discussing complex financial products. So it's really important to consider that critical human side of the equation in an omnichannel solution, where we're able to create that seamless journey no matter what the medium. So now I'm just going to give you a brief intro to the first demo, where I'm going to be basically showing you the seamless omnichannel capabilities through a customer applying for a mortgage using a combination of a mobile app, live chat, and also physical branch interactions.
In the first part of this demo, we'll see how a customer is presented with a new mortgage offer from his bank, based on analysis of the customer's situation using artificial intelligence. We'll also see how the customer interacts with a chatbot to set up an appointment to learn more about the offer. Our customer, Archie, is out in public at a sporting event, for example, and during a lull in the action, he signs into his mobile banking app. For security, the banking app requires a one-time password, sent by text message, which Archie fills in. As soon as Archie signs into the mobile banking app, a banner appears to notify him of a special mortgage offer. As a newlywed, Archie and his partner have been thinking about getting a house together, but this offer comes as a surprise. Archie hasn't yet inquired about mortgages with the bank. Through machine learning and AI, the banks determined that Archie would likely be interested in this offer because he'd recently set up a joint account. That's often one of the key triggers for when people need to get a mortgage. The proposed 1.99% interest rate sounds really good, but Archie wants to learn more before deciding to accept. Since he's out at a soccer game, he can't really call and talk to an advisor or visit a bank branch right now. However, by tapping the chat option, Archie will be connected with Faraday, a chatbot assistant that can help set up an appointment for him. The chatbot has access to the customer's information in the bank's system, and so it begins by asking Archie to confirm the employment and salary details, as this will affect the terms of the mortgage. As it happens, not only is Archie recently married, he's also recently moved on from his now former job at Future Tech, so he taps no. The chatbot asks for Archie's new employer and job title, which Archie provides. Next, the chatbot asks whether Archie's salary has stayed the same. He got a raise with his new job, so Archie again taps no. At the prompt, Archie types in his new salary and sends that update. Now that Archie has updated his employment and salary details, the chatbot checks for his loan eligibility. It informs Archie of the amount he's eligible to borrow and asks whether he wants to set up an appointment with an advisor for further discussions. Archie happens to have a fair amount saved already, over £50,000, and that, along with the loan offer, sounds perfect for the kind of house they'd like to buy. So he says yes to setting up the appointment. The chatbot offers Archie the option of visiting a branch location or having an advisor meet him somewhere else more convenient. Archie's place is still somewhat of a mess following his recent wedding, so he'd prefer to go and visit a branch location. Again, by checking the customer's record, the chatbot is able to suggest several bank branches that Archie's visited and asks whether he'd like to visit one of those or choose another. In this case, Archie will select the Canary Wharf branch. Archie is eager to have this meeting as soon as possible so that he doesn't miss out on the mortgage offer. He selects the first available date and time. The chatbot offers 3 advisors who are available in that branch on that date and time. Archie recognises the first one, Marco Garcia, who he thinks he may have met before, so he goes ahead and selects Marco. With all those details chosen, the chatbot asks Archie to confirm his email address so it can send a calendar request for the appointment. Archie's personal email hasn't changed, so he can tap yes to confirm. As a final step, the chatbot presents the details of the appointment that's been set up, the advisor, the date and time, and the branch location, and asks Archie to book or cancel. Everything looks set up as Archie wants, so he taps book now. The chatbot confirms that the appointment has been booked, and it provides a thumbnail map of where to go with a link to a larger map. Now in this next part of the demo, we'll see how the greeter at the bank branch can quickly identify customers who are ready to be served and take care of preliminary details before an appointment. The greeter has a tablet or laptop with a customer services representative app that helps the greeter assist customers and connect them to tellers and advisors. On the app's meter and greeter dashboard, the greeter can see who's waiting in the lobby for the service and the customers that were identified through facial recognition or other modes of identification. The dashboard also shows the teller and advisors in the branch any announcements and campaigns the greeter should be aware of and other useful information. The greeter can see that our customer, Archie Andrews, is waiting in the lobby and has an appointment. The greeter can engage with the customer and view the customer's profile, including banking relationship, view next best actions for the customer, and see exactly what he wants to do at his appointment. So, the greeter can see Archie is here for an appointment about a mortgage application, and the greeter can also see other offers and opportunities available to Archie, products Archie already uses, and more through a full 360-degree view of the customer. Also in the customer view, the greeter can see an alert. It looks like Archie is due for a data quality check, so the greeter can now step forward to meet Archie and take care of that data quality check before Archie's appointment. Tapping the data quality alert, the greeter can see Archie's details, the employment information, contact information, home address, and more. A caution icon next to the employer and monthly income listing alerts the greeter that this information may have changed recently, and this is something for the greeter to verify with the customer. This is part of the KYC compliance process called Know Your Customer. To validate the information, the greeter can present Archie with a few options, such as receiving an SMS text message with a one-time PIN. The greeter already has Archie's contact information available, making it quick and easy to send this validation request. The greeter selects the SMS option and sends Archie a code to his smartphone by text message. When Archie receives the text message, he can repeat the code back to the greeter, who types it into the form and completes the verification. Archie also informs the greeter that he's looking for a new checkbook, for which the greeter can quickly capture the request, saving time for Archie and his colleagues. With Archie's information validated, he's ready for his appointment. The greeter now escorts Archie to the advisor. In the final part of the demo, Archie goes ahead to meet the mortgage advisor, who processes the application after thorough due diligence. During the process of application, Archie is required to provide a few physical documents, and that he notices that his salary certificate is missing. The advisor informs Archie that the application has been seamlessly pushed to his mobile, and he can upload the documents from there if there's a soft copy available. Archie is excited to hear about these capabilities, and he logs into his mobile application to upload the documents since he has a soft copy of the certificate available. The advisor already has the rest of the documents which he can upload, so the application then flows forward on the mobile device, allowing Archie to digitally sign the contract that is offered by the bank. In this demonstration, we saw an example of how banks are transforming the customer experience with artificial intelligence included throughout each stage of the customer journey to make it seamless, fast, and rewarding. We saw how a customer's initial interest was captured using digital channels, and then in order for the customer to plan their next steps, goals, and the purchasing of a new product, the customer was directed to a physical channel to meet an experienced advisor. Although digital enablement has been long understood as the opportunity to migrate customer actions to lower cost channels, we have to be careful that migration is not restricting positive engagement and revenue opportunities. In order to drive a positive revenue, banks must understand their customers' preferences and imply an intersection of channels throughout the customer journeys. What we're also seeing recently in the wake of the pandemic is that less number of customers are willing to visit the bank branches. Although these customers are enabled with digital channels to address their financial needs, the customers feel handicapped when they want to take an opinion or leverage the expertise of a banker. Banks are aware that customers value the importance of human interaction when they need objective advice, so the challenge for banks is how to bring in the human interaction in these digital channels whilst maintaining the prevalent norms. The enablement of the bank staff to communicate with their customers through chats, video calls, and other communication channels is often seen as a viable solution to this problem, bringing in an elegant mix of digital and physical channels. In the next demonstration, we shall see how our customer, Mr. Archie Andrews, uses such a communication method to interact with an advisor that can provide him with the expertise to solve his queries. In the previous demonstration, we saw how Archie was able to secure a mortgage from his bank through a mix of digital and physical channels. Let's now look 10 months down the line after this mortgage has started. Archie's family has grown with the happy arrival of their first child, and it is a moment to celebrate for the family. Although Archie has been regularly paying his instalments, now he is a little concerned. He knows things will be fine, but at least for the next 2 months with the newborn, he could certainly use some extra cash. This is one of those moments where Archie could really use some advice from his bank and checks the possibility to restructure his ongoing loans. However, in the prevalent social conditions and with the addition of his new child, Archie is apprehensive to visit the bank branch. So, in order to reach out to his bank, Archie logs into his mobile application and initiates a chat. As Archie goes ahead to start the communication, it's first responded by a bot. Archie can go ahead and complete in different transactions like making a bill payment or fund transfer. For now, Archie has a query and provides more details about what he's looking for. Using natural language processing, the bot understands the subject of Archie's query and responds back accordingly. Since Archie has already signed in and is initiating this chat from the secure space, he's already been identified, which eliminates the need for verification. The bot then communicates with the back-end system to retrieve a list of active loans for Archie. From these, he selects the mortgage account where he needs the assistance. After selecting the mortgage account, the bot presents Archie with the various servicing options. Since Archie wants to request a restructuring, he selects that option. The bot then shows the various options through which Archie can apply for the restructuring. He can either do it using self-service channels like the mobile application or internet banking portal, or he can get in touch with the bank staff over the chat channel in order to continue the application process. Archie would like to continue by having the conversation with the bank staff, since this would allow him to explore other options while communicating with a mortgage expert, as well as getting some financial health advice. Based on his selection, the chat is automatically routed to an advisor with expertise in loan servicing. Through integration with the back-end loan servicing solution, the relevant customer's identification information, along with the communication history, is shared with the advisor. The advisor can see that Archie might be in financial distress, which is why he's asking for the restructuring. The advisor presents Archie with a repayment holiday option, which is also provided by the bank. Archie's not sure about the repayment holiday and wants to know more about it. The advisor informs Archie that in the wake of the pandemic, the bank is offering its customers the ability to take a repayment holiday for 2 months without any extra charge. Archie is pleased to know that his bank is looking after its customers in this time of need and gives great reassurance to Archie. Following this chat, Archie now understands that a repayment holiday will suit him much better compared to a total restructuring, since this would allow him to cut short his expenses for the next 2 months without incurring any penalties. The advisor then takes appropriate action upon Archie's agreement and initiates a repayment holiday request for mortgage and personal loan. In this manner, we showed how tailoring customers' journeys that incorporate a blend of physical and digital channels adds value to the customer interaction. The customer feels more confident and valued when they can interact and leverage expert opinion from their banks whilst making decisions about managing finances or applying for a new product. The value of human interaction, or the physical communication between the bank and its customers, results in projecting a really great positive outlook of the bank amongst its customers.
So thank you very much, Steve, for this demo. Before moving to the Q&A, I would like to briefly introduce you to what could be a possible next step for your organization. VeriPark participates in the Catalyst program developed by Microsoft for their partners. And as a first step in this program, we can offer you a one-day envisioning workshop where we can ideate together and jointly define how to enable the digital transformation in your organization. So we have a team of experts who have been certified by Microsoft to run these workshops. And a typical one-day brief will start with a review of your business objectives, followed by a mutual discovery and visualization of solutions, ending with a clear and very actionable picture of how we can help you reach your business goals. So if you're interested, then you can let us know. Now I will leave this poll open for a little while and you can vote or indicate if you are interested. I would now like to invite our speakers to turn their cameras back on to answer your questions. So, yes. So a first question, maybe one for Syed. Is someone who would like to know if our solution also can incorporate contact center in the overall omnichannel solution?
Yeah, that's actually an interesting question, and that is the approach that we are trying to take also with the solution. So yes, our solution does incorporate contact center within the same omnichannel framework. And right now, Steve showed you an example of the chat that was coming in from the mobile application. However, we do have the ability to extend it to other social platforms as well. So now we are seeing the customers of the bank communicating through WhatsApp and other different kinds of channels. So in one single platform, we have the ability to entertain all such communications on these different channels.
Okay, thank you. Jason, one for you maybe, and it's related to COVID and how COVID has impacted or will impact the way that customers are interacting with the banks in the future, even after the pandemic is over.
Yeah, and I think hopefully I threw enough data points within the presentation to kind of underscore this a little bit, but I think there's certainly some things that remain to be seen. But the one piece I would kind of harken back to is that the shift that we've seen that has driven the digital engagement this year has not been a capability one. However, it has forced us to really look at those capabilities, and I think it's catalyzed a lot of development. It's taken a lot of doubts maybe off the table. So there has been a lot of work around not just the front end of things, but how to automate. And so there's an entire sort of bank approach, I think, at this point to digital over the course of the last year that has made it so that we probably won't see a significant shift back to the personal locations and to the branches, et cetera. But I would anticipate there would be some. And the whole thing goes back to our ability to deliver expertise and deliver capabilities to customers to help them through the most trying of times. And I think it's going to end up being less about doing their day-to-day. I think most customers are comfortable with digital now doing their day-to-day. It's about being able to step up to those situations that are driving stress for customers financially, especially in those that are the most vulnerable. And by the way, one thing I should mention, I said that there were 40% of the population were financially vulnerable. Those are not underbanked people. Those are people who actually have relationships with financial institutions. So those of you that are listening, your customers, there's a good subset of them who are financially vulnerable. So kind of focusing on those disruptive issues is probably a really good approach to make sure that you're able to maintain more of a digital footprint if that's where you're leaning toward.
Okay, thank you. Another one that just came in, also for you, Jason, is how do you see the uncanny valley effects in digital channel interactions?
I'm sorry, the what effect?
Uncanny valley.
The uncanny valley?
Yes, maybe I can unmute the asker to. Yes,
So,
Aaron, feel free to ask your question.
Sure. The uncanny valley effect is something originally out of robotics, in that with robotics, as robots became increasingly human, they got to a point that it became uncomfortable for people because it was almost human, yet people knew they weren't actually human. And I think with digital channels and chatbots, some of those same effects also happen.
Yep. I Googled it at the same time. I was like, oh gosh, of course, I need to read more science fiction these days. No, so I think that's a really good question, because sometimes we simplify it and say, okay, it's just creepy, right? Like, I think there's that aspect to it. I think that what we're seeing is that there is some disillusionment with chatbots. And it's not just about people knowing that they're not talking to a person. Ultimately, most of them are just not truly conversational, right? We had kind of the way that Gartner breaks it down. We've got chatbots and we've got virtual assistants, and then there's some extrapolation even to that, where you've got virtual customer assistants and virtual financial assistants, and we're loving to add nomenclature to this. I think that where customer comfort comes in is that they're getting what is necessary out of the bot, but that uncanny valley comes in when they don't necessarily trust them. So it's not necessarily that they don't get information. I think that a lot of times when that expertise value driver comes in, it's not even about, let's make sure I have the information. It's just needing, having another person with whom I have trust say, yes, this is the right way to do it. So I think that is really kind of the key with these types of engagements, is just, the customer looks at it and goes, okay, that makes sense, but I don't know if I can trust this right now. And I think that's the effect, rather than necessarily a creepiness at this point anyway.
Agreed.
Could I
Sorry, can I just offer a small follow-up to Stephen on that? The effect when you walk into the bank and all this stuff has happened, and the greeter actually asks me about something else, which is not something that I was there for. I was there for the mortgage interaction. I will use the word creeped. I am not unlikely to be creeped out a little that this person who is the greeter suddenly knows. I can work out that, oh yes, they have access to all my bank account details, etc., etc. But I still may be not very comfortable that the greeter suddenly talks to me about another topic, that they know more stuff that I didn't really necessarily come into the bank to do. So I think organizations have to be very careful about that.
Yeah, that's a very good point. And we deal with different types of channels when customers do actually go into those branches. So you've got the face-to-face channels and also the hip-to-hip ones. So where the customers can actually see the information that's on the screen of the bankers as well. So what we do is we call those. You've obviously got those offers like the mortgage one that's been pushed, which is I suppose more of the marketing side of it. When it comes to those interactions actually in the branch. What we do is we have things like next best action to suggest an offer that the banker could provide and suggest an interaction that the banker can provide, and then almost leaving it up to their discretion as to whether or not they provide that offer or that interaction, if that makes sense. So I completely understand what you mean. If those things are pushed to them and they're thinking, hang on, where's that come from? That's one thing. But what we like to do is almost kind of take that step back slightly and just leave that up to the actual human that's going to be interacting with the customer in that scenario.
Makes perfect sense. Yeah. Thanks.
Yeah. And also, just if I could add some other stuff around the chat side of things. I think it was very interesting when chatbots first came out. There was that uncanny valley thing, because what everyone would try to do is make that chatbot seem like a real person, and there would be that whole thing where you'd think, is this, am I talking to a chatbot or am I talking to a real person? And if you saw within the demo there, what we do is, I think through these different interactions and through the learnings, you've realized that actually what you do is you call it VeriBot or something when that chat is first initiated. And as you'd have seen on that demo there, we then have the message saying we're now connecting you to a live agent. So trying to keep that uncanny valley away. So if you're in a video chat, you know it's a video chat. If you're chatting to a chatbot, you know you're chatting to a chatbot. And just keeping that disassociation between those either robotics or real person contact.
If I could just add one really quick thing around trust. Customers actually, we've had many debates on this. Customers might not necessarily like their banks, love their banks. It's not something where they let's look at that relationship through that lens, but they trust their banks to use their data and help them. And when we start thinking about some privacy issues around using this, when we start thinking about, how decisions are being made and things are being pushed to them, the example that you talked about, walking in and then talking about a product that you weren't there for, that's not going to engender trust, because it seems like it's a very bank-centric way to do it. Like, we want to try and give you this other product rather than, the information that I kind of provided to you already. Banks, our customers know that they're going to have their data used by banks, and they trust them to do that. But where we're not really, what your example highlights is that too often it's about the product rather than what the customer actually needs, and really that's where we need to get to is that trust piece, and using all of them in concert with one another, not trying to make the chatbot into a person. To Steve's point, let's not try and make it look like a person. Let's be very upfront with, we're doing some really cool things with technology, but ultimately we're going to deliver something that works best for you, not something that works best for the bank.
Great points. Thanks, guys.
Cheers.
Thank you. So I think there is one more question. Syed, that's one that you want to take?
Yes, Catherine.
Yeah.
I think probably someone in the chat is wondering whether we have some capabilities with regards to the branch operations. So I just wanted to highlight that we have actually a transactional framework, which we have talked about in our previous webinars also. And onto that transactional framework, we have the channels which the customers are going to be interacting with, and we also have the branch operation channels within that. So we'd be more than happy to take that forward and discuss these kind of operations. We have a few of the success stories where we have implemented these branch operations. And as kind of like just building onto the idea, as Jason was mentioning, the key idea of the solution, or the key idea of the entire framework or the interfaces, to build trust with the customer and to make it easier for the colleagues of the bank to be acquainted and use the solution. So we do have these capabilities, and I just wanted to let the person know that yes, we are on the right track with it.
Okay, thank you very much. So I think that was the last question. I have a few questions about the presentation and the recording. So after the webinar ends, our webinar software will need some time to process the recording, but as soon as it's ready, you will all receive an email with a link to the recording, and you will also receive a follow-up email with the handouts and all the other information you need. So I would like to wrap up now. Thank all the speakers again for their contribution. Thank, of course, the audience for their presence. Don't hesitate to reach out to us to request a meeting or a workshop. You see the email address here on the screen. It's also the same email that was used to invite you or in the GoToWebinar invitations. We are really looking forward to engage with you on a one-on-one basis. We hope you will join us again for one of our next webinars. There will be more in the upcoming months. And to be sure that you are the first one to know about it, you can always follow our LinkedIn page. And then you will be the first to know when we have a new event. So that's all for now. Thank you all, and goodbye, and have a nice day or end of your day. Bye. Thank
Thanks
you.
all. Bye.